Hello, ladies and gentlemen, Greg Michalowski from ForexLive.com. This is the Kickstart video where I take a look at three of the major currency pairs of euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. So let's get going. Fundamentally, we've had a lot of news come out. We had the ECB cut rates by 25 basis points, retail sales, Philadelphia Fed index, and initial jobless claims you can characterize as all stronger. So it looks like GDP in the U.S. is going to move higher while the ECB is cutting rates. Will the Fed back off from the path of rate cuts going forward? That may be more bullish for the U.S. dollar. Let's take a look at some of these major currency pairs from a technical perspective. We'll start by looking at the euro versus U.S. dollar. And when we look at this 4-hour chart, what sticks out to me, of course, is that we moved below the 200-day moving average in trading yesterday, also below this swing area going back in time to this period right through here where we had a number of different swing lows and swing highs forming either support or resistance before breaking to the upside and moving higher through here. We did come down toward that level right here and found support. We didn't return to that level until yesterday where the market came down to the 200, found a modest bounce that took the price back up to this swing area right through here where we found willing sellers against that level and then forced its way back below the 200-day moving average. That momentum continued. We did have a bounce back after the ECB rate decision, or right before it, I guess I should say, and we came right up to that 200-day moving average, found the sellers again, and the U.S. data has pushed the price to new lows for the day. The next target comes in against probably this low right here at 1.08248. But as long as the price remains below the 200-day moving average, we kind of look for a retest of the August low, beginning of August low at 1.0777 as a downside target that we can aspire toward. That is if the 200-day moving average, which is now much stronger after breaking, testing, moving away as a resistance level on the top side. So be aware of that level. That's a key barometer for euro-dollar traders, not only today but going forward. Let's take a look at the dollar versus yen. And as you can see, we did extend to a new high going back to this day right here from August 1, 2024. We're back above this high right here from the mid-August at 149.356, and I'm going to say that this is now the strong risk level for traders. We've held it on two bars here on the 4-hour chart and moving away from that. So it would take a move below the 149.356 to dissuade, to disappoint dollar versus yen traders. Alternatively, we want to see momentum now start to develop with the 50% retracement, 100-day moving average, 200-day moving average as all targets on the top side. In addition to that, let's not forget the 150 level. We did move above it briefly here in trading here today, but we need to get and stay above that level to increase the bullish bias in the dollar versus yen. So those are my key levels on the top side and the downside for the dollar versus yen going forward. Finally, let's take a look at the sterling versus U.S. dollar. And the euro has the interest rate cut within it. The sterling versus U.S. dollar is could not move lower with the data today. In fact, we're trading back above the 130 level here, which given a little bit of a bullish bias. That 130 level was tested right here. We came in 130.01 on this low right here before moving to the upside. In trading yesterday, we did try to break below it, and we did try to stay below it, as a matter of fact, in trading here today. But the most recent push to the upside has broken that level. We'll watch that in the short term. It seems like sterling is doing its own thing. On the downside, we do have the 100-day moving average and the 61.8% retracement, both near the 1.2958 level as a key support level on the downside, and perhaps that is giving the short-term buyers a area to lean against, to buy against. So right now, as long as the price remains above the 130 level, the upside is kind of the favored technical view, with the 50% midpoint at 1.30488 as the next key target to aspire toward. Alternatively, if the price does move back below the 130 level, and we could, given the stronger U.S. data here, if the market starts to focus on that, we could see a rotation. The buyers turn to sellers in a rotation back down toward the 129.58 level. That area where again the 100-day moving average and the 61.8% retracement of this move to the upside is found. So there you have it, a quick look at 3 of the major currency pairs to kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.